rule to grow your business. Now, if you're an entrepreneur or you are thinking about starting a business, your biggest challenge will not always be competition. It should not always even be customer. Most times, your biggest challenge will be how you manage money. Many great ideas have died, not because the idea was bad, but because the entrepreneur made financial decisions that slowly destroyed the business. Across different countries, different industries, and different economies, the same financial mistakes appear again and again. Now, today I want to talk about some of the most common financial mistakes entrepreneurs make and how you can avoid them. Not from theory, but from patterns we have seen repeatedly in business. Now, the first mistakes entrepreneurs make is mixing personal money with business money. Now, this is one of the fastest ways to lose control of your finances. Many business owners start small. In the beginning, it feels normal to move money between personal and business accounts. Now, if the business makes money, you spend it. If the business needs money, you fund it from your pocket. Now, at first, it will feel flexible, but over time, it creates confusion. You can no longer clearly see whether the business is profitable or not. You don't know if the business is funding your lifestyle or if you are funding the business. Serious businesses operate with financial clarity. Now, the business should have its own account, its own expenses, and its own financial record. When you respect that boundary, you begin to understand the real performance of the business. Now, the second mistake is spending too much money too early. Many entrepreneurs start a business and immediately begin spending on things that look impressive, but do not actually grow the business. Expenses, offices, luxury furniture, unnecessary staff. Branding that costs far more than the business can afford. There is nothing wrong with growth and presentation, but timing matters. Early-stage businesses should prioritize survival and revenue. Cash flow is oxygen for a business. If you move oxygen too early, the business suffocates. The goal at the beginning is not to look big. The goal is to become sustainable. Now, the third mistake is not understanding cash flow. Profit and cash flow are not the same thing. A business can be profitable on paper and still collapse because it runs out of cash. Now, this happens when an entrepreneur focuses only on sales numbers or profit margin, without paying attention to when money actually comes in and when expenses must be paid. So, for example, if your customer pays you after 60 days, but your expenses are due after 30 days, you constantly struggle financially. Now, understanding the timing of money is one of the most important financial skills an entrepreneur can develop. Businesses do not fail because they make small profits. Businesses fail because they run out of cash. Another common mistake is not paying attention to financial record. Many entrepreneurs avoid their financial reports. They are passionate about marketing, operations, product development, and customer service. But when it comes to numbers, they look away. But numbers tell the real story of the business. Financial records are not just documents for tax authorities, they are tools for decision making. Now, when you understand your numbers and you begin to see patterns, you can see which product is truly profitable. You can see which services is draining resources. You can see where money is leaking out of the business. Now, entrepreneurs who understand their financial data makes better decisions faster. Another mistake is depending on one single source of income. This is extremely risky. Now, if one major client leaves or one market shifts, the entire business can collapse. Healthy business think about diversification. It does not mean doing everything at once. It means gradually building multiple revenue streams that support the business. When slow down, the other helps stabilize the company. Now, resilient business are the one that depends only on many sources. And another financial mistake entrepreneurs make is underpricing the product or services. This usually comes from fear Fear that customer will say the price is too much. Fear of competition. Fear of losing sales. So entrepreneur reduces prices just to attract customer. But low pricing without proper financial calculation can quietly destroy a business. Now, if your pricing does not cover your costs, overheads, and profit margin, then the more you sell, the more money you lose. Now, a business must be priced for sustainability, not desperation. Customer value confidence. When you understand your value and your costs, your pricing becomes strategic. Another major mistake is not preparing for unexpected situations. Every business will face challenges. Economic challenges, market shifts, supply disruption, technology changes, unexpected expenses. Entrepreneurs who operate without financial buffer are constantly vulnerable. A strong build reserve, even small reserve, creates stability. Now, when a business has emergency fund, decisions become more calmer, more strategic. Without reserve, every problem becomes a crisis. Now, another mistake is trying to do everything alone. Some entrepreneurs believe they must handle every aspect of the business themselves. They avoid accountants, financial advisor, consultant, or mentors. But finance is a specialized area. Professional guidance can help identify risk early and create stronger systems. Successful entrepreneurs do not try to know everything. They build teams and advisors who strengthen the business. Now, good financial advice often saves business from expensive mistakes. Another mistake is focusing on revenue and ignoring profitability. Entrepreneurs love to talk about sales, but revenue alone does not guarantee sales. You can generate millions in revenue and still have no profit. What matters is what remains after all costs are paid. A healthy business constantly reviews expenses, margins, and operational efficiency. Profit is what allows a business to grow, reinvest, and survive difficult periods. Without profit, revenue is just activity. Finally, one of the biggest financial mistakes entrepreneurs make is thinking short-term. Many decisions are made for quick wins instead of a long-term stability. Cutting corners, ignoring compliance, avoiding proper financial structure. Now, not investing in systems. Now, this shortcut may save money today, but create serious problems later. Successful entrepreneurs think in years, not in weeks. They build systems that allow the business to grow responsibly and sustainably. Now, the truth is, entrepreneurship is not just about ideas. It's about discipline. Financial discipline, strategic discipline, and long-term thinking. If you can master how money flows through your business, you dramatically increase your chances of success. Now, no matter the country you operate in, no matter the industry you work in, financial awareness is one of the greatest advantages an entrepreneur can have. So, if you are building a business today, ask yourself a few honest questions. Do I truly understand my numbers? Do I know where my money is going? Am I building financial stability or am I just chasing growth? Now, because of strong business is not just built on ambition, it's built on financial intelligence. Now, the entrepreneur who understands this early will always have a powerful advantage.